Lantheus. Now, I don't think I've ever talked about this one before, Pete, but
Me neither.
LNTH, it's up 30%. They make diagnostics and drugs for radiopharmaceutical technology. Now, what does that mean? That means like when you go in for basically treatments of some cancers and other maladies, other diseases and so forth, sometimes you're treated with something like this instead of just chemo or whatever. And sometimes these are also used to find some of those issues in your body. Well, these guys trade to a 13-month high after Medicare proposed hiking the reimbursement rate for diagnostic radiopharmaceuticals, which means, of course, that the government is going to be paying, which is great. Insurance companies love that. You could probably project this over to insurance companies and what they have to pay. But you could also say, hey, if Medicare is paying for this, that means it's an approved treatment. And that's about as high up the food chain as you get, Pete, in terms of an endorsement by the government.
And this is the exact opposite of what we talked about earlier. And I referenced this one, but Illumina. Yeah. Illumina, 51 PE. They got a real problem going on here. The balance sheet is fine, but they just don't seem to be able to get anything moving in the right direction. So they're making that acquisition that they've made. I look at Lantheus, John, as opposed to being down, this one, a little bit. This one is now up 35%. The high lows, we're looking at $50 to 105. The 105 is today. That's the new high. And you talked about the Medicare proposal. That's huge. That just locks it in for these guys. They have huge turnover today. There are some shorts. Those shorts are not going to be very happy. Hopefully, for their sake, they've been able to somehow cover something. But this is a business where the revenue growth was strong already. It was about 9%. Now this thing, when you look at it, because of what they're doing here with this proposal, their percentage of their growth there on the revenue side is going to be huge. And it's going to really filter down and give them a great opportunity. So I think this is a name that, even though it's at its highs, I don't think it's at the highs of all time, because this is a stock that I think has still a lot of room in front of it to go higher.
Pete, in 2015, the stock was $2 a share. $2 a share. Okay. Pete just said, and he's right, that the stock's over 100. In fact, it's 102.50 right now. So that is, my friends, not 10x. That is 50x, 50x. So you want some stocks like that in your portfolio. All you had to have was, if you had 1,000 shares of that, and it went from $2, that's $2,000, to now 102.50, that's $102,000. And imagine if you had more than 1,000 shares at $2 a share. What if you put 10 grand into it, Pete? You'd have 5,000 shares. That's 500,000 plus today if you had just 10,000 in it in 2015, 9 years ago. Wow.
That would take some patience, though. Let's be honest. That'd be a lot of patience to hold on to that.
True. But, from 2015, Pete, until it made that real first explosion in 22 that carried it to like $80, that's a 40x return. Then it's had some volatility here, like you say, because, people are wondering, are they going to get the approval? Maybe not, sells off. Are they going to get the approval? Maybe so, runs up. It's done that a lot between 22 and 24. That's 2022 and 2024, folks.